Stocks simplified, profits multiplied. Welcome back to the Apex Investor channel. This is the daily update for Monday, October the 18th. Today's big loser was RVNC with negative 39%. The big winner today was IO, up 56%. We'll take a look at the trending stocks next. Welcome back. GameStop was up to 186. AMC was also up to $43 today. We'll take a closer look at the trending stocks that we are tracking on this channel, beginning with IronNet, which was down about 7%. We can see today was trading at $9.97 to $10.87. I do believe that this level of $9.97 is the true support range, around $9, $10. The volume was 3.2 million. So this is a great time to pick up IronNet at this price, around $10. I did end up buying it recently at just over $12. So this is a really great discount. Expect this to go up back to $20 in the next 6 to 12 months. Next is the MMTLP, the Metamaterials Torchlight Preferred Shares. They were down as well to $1.61. It was trading between 145 to 179, and the volume was just above half the average. The hype is dying down for these preferred shares, and that is affecting the price of the actual stock itself, Metamaterials, which was down to 486, trading between 483 to 506. Next stock is Clover Health. They were trading between 775 to 805 today. So we can see Clover is seeing a recovery. Next is I want to look at Dexcom just briefly to see what's going on with that. That stock has been very high, well above $400 and $500. The last 52 weeks was trading between 300 to 579. One of the reasons I'm tracking the stock is because we have one stock that is Sensonics, SENS, and they have a similar technology to Dexcom, but their stock is way undervalued in comparison. So if we look at this chart, especially on a yearly basis, we can see that support is looking like $330, around that range. So expect this to go back down to around 350, maybe even 330 again. And the last stock we're going to look at, actually not a stock, but Bitcoin, the cryptocurrency, trading between 60 to 62,000 US dollars today. So this is getting close to the 52-week high. What a recovery we've seen for Bitcoin. And before I get to the news, or I should say the Reddit news, I'm going to look at, I'm going to address the video regarding the Black Monday, which is supposed to be today. That would have happened if they did nothing in regards to the debt ceiling, the US government. So here we see this article saying Democrats in the House of Representatives will consider getting rid of the arbitrary limit on how much money the US government can borrow to fund operations. It says here, over the weekend, they said the House will explore options to remove the threat that the debt limit poses over the long term, now that Republicans have demonstrated a willingness to weaponize it for partisan purposes. So it said, I mean, this is leaning definitely more to the left. But anyhow, Democrats have resisted abolishing the debt limit, insisting instead that Republicans join them in voting to temporarily suspend the borrowing ceiling or to increase it by an incremental amount, necessitating more voting and potential partisan clashes down the line. But Senate Republicans refused to support a debt limit increase earlier this month. and they nearly ran out of cash. It says here the Senate Majority Leader said he agreed to vote for the debt limit increase because Democrats had threatened to change the Senate's filibuster rules. So we can see a lot of politicking here, but essentially they are delaying. Uh, let's just keep reading. It's not an exaggeration to say the Republican position is motivated by political spite. Okay, what do they actually do though? Democrats could use budget reconciliation to make the entire phony debt ritual go away forever. They've just lacked the collective will to do so. Again, most of the media leans left, so I have to point that out. And just finishing up here, it says here, House Speaker Nancy Pelosi said last week she's still hoping for a bipartisan debt limit vote. So they're just further delaying, and they haven't decided on what to do. They're simply delaying what they can do regarding the debt limit. Are they going to raise the debt limit? Or are they going to continue just artificially inflating it? So we'll see. But right now, it seems the crisis is averted, possibly until the new year and possibly into next year. So it seems like we're moving the goalposts further and further, but I think that it will happen. It's an eventuality. It will happen soon, but it's a matter of not if, but a question of when. Okay, here's the first article from Wall Street Bets. They unveiled a statue of what appears to be Harambe or a big gorilla, but anyway, it's a big monkey, and it's standing across from the bull statue. Yeah, this is real, but this is a historical moment. I'm not sure if that statue is going to stay up there. Here's another angle. Wow, very, very dramatic. So that's the first article from Wall Street Bets. The second post on Wall Street Bets. This one is called Hedging Against a Market Crash. It's 2008 all over again. Begins, hey everyone, I did put a lot of research into the current situation. Again, my video about Black Monday really caught on. It's got a lot of views, so I'm addressing that right now. And this is one of those posts that address that situation. So he finally built a portfolio that he's 100% behind long term. However, the more I learned, the more sure I am that we will experience a market crash rather soon than late. I'm not here to debate whether or not you think this is true, but the situation for this thought game is that we might see a crash similar in numbers, not principle like 2008, all over again. In general, during times of high inflation, most businesses will not come out well. The earnings will go up, but they need to put more energy into their own business to even stay in the same place. A hedge for this are companies that can easily scale their business without needing money flow. I'm looking at you, Facebook, who can place 10% more ads, Adobe, who can increase their product price without fear of losing customers, Apple, Microsoft, I'm going to insert their Google as well. The theory behind this discussion would assume that GameStop is a good hedge, and to some degree AMC as well. I even heard that from the higher ups in a very big German bank, which is incredibly weird since they were against it months ago, and they didn't even want to talk about it in the first place. This assumes that the crash is happening because of said theory I explained below in short. It does not mean that a high percentage of the entire portfolio should persist of them or consist of them, but a chunk, just in case, it might be a very good idea. The market is more complex than many think. Another hedge and long-term hold cannot be mentioned in this sub, but you might guess what it is. Sadly, we can't debate this here. It has to do with weird blocks and tokens, the latter of which might change the whole gaming industry. And I'm thankfully in the position where I can take constant profits from it in percentages that sound absolutely insane. So in case of this theoretical scenario, I would like to get everyone's opinion on this. I want to be clear. I value every single opinion and would love the most input possible. In case of no crash, my investments should grow steadily, but in case of a crash due to named circumstance, they would skyrocket. Again, this is purely theoretical. I do not want to discuss whether or not it is happening, but what you should do or what you would do in case it will happen in the near future. Too long didn't read? How would you hedge against a potential market crash, such as 2008, due to Evergrande and GameStop and the overall situation? Since I got downvoted to heck on a different subreddit for even mentioning GameStop and spreading the word, I will add the theory behind GameStop again, even though most of you might know this already. So here's the theory. The most part of the stock, so most of the majority of the stock being traded is in dark pools, and all the shorting hedge funds are telling us that they closed their position or they covered, which is mathematically impossible. Do the research yourself. So what I think is happening is that all of these shorts are actually synthetic and not real shares. There is tons and tons of proof of it, too much to even deny at this point. They exercise and sell deep in the money calls in order to get the failure to deliver. So basically, they are passing them from one to another and to another. And I think the same thing exists right now with AMC as well. Think of it like this. A good analogy I found is you get a credit card with a $10,000 limit on it. You max it out and then you have to repay the next month. However, you have endless credit cards. So you just get another credit card and you pay the 10,000 with that. So the debt is still there. It's just getting passed. It's getting passed on to another credit card. You can do that forever. Now you need more money. So you do this all over again and keep digging the grave deeper and deeper. In this theory, multiple times the float is continuing. I should say multiple times the float and continuing. All right, so it's getting deeper and deeper. In order to stop that, you have to lock the float entirely, which is why everyone is currently directly registering their shares. If this is true, I don't have to explain the potential outcome. There's simply too much proof as that there's so much proof that you can't deny this. ComputerShare confirmed this. Quote from their Twitter: shares held directly on the books of US companies through a transfer agent are not held at DTCC. As such, shares are not available to be loaned for any means within the security markets. ComputerShare is a registered transfer agent and therefore does not lend shares in any capacity. So that's a really good post. That calls to mind the situation with metamaterials. I do believe there's a relationship there with metamaterials that they want to protect the shares from being borrowed. And ComputerShare is one of the strategies I believe is being employed for Meta. Okay, so I have no idea what to hedge. Your guess is as good as mine. Metals, commodities. I think we should, again, put 50% of our money aside in case of the stock market crash. And then once that happens, you're ready to buy once it hits rock bottom. Next post is talking about a plan for Christmas disaster and by the game developers. Here's an easy layup. I think we can get ahead of the news here. Theory, if you've heard about the looming disaster, so it's a lot of disaster talk today. We've got the possible market crash, and we've also got a looming disaster due to severe supply chain issues. Now, this is a reality. It's not so much a theory. This is happening right now. Ports are being blocked. Trucking and transport shortages are happening. Rising material costs and inflation have prices soaring. You can look at the real estate market, for example. Presents for little spoiled people across America may be in very little supply. Look, think about PlayStation 5 that was already in short supply even before this happened. Or they're probably going to be non-existent during the holiday shopping season. So what do you do? Most kids probably prefer the in-game purchases as presents versus physical toys now. Weird, I know, but I've seen kids get more excited about a NBA 2K VC gift card than actual tickets to an NBA game. So a massive amount of in-game purchasing is about to happen for these game developers because they are not constrained by supply chain or inflation issues. So they stand to gain more than anyone this shopping season. So instead of buying physical, people are buying digital because there's a physical shortage. Timing. I see the start of the Christmas shortage talks happening shortly after Halloween. And then not long after that, the realization of gaming companies being the only ones to guarantee Christmas gifts. Once we start getting into the holiday season, the shortages actually do start to become more prevalent and talked about. The sentiment will be the same as pandemic times. Kids are stuck at home without any physical presence, and gaming industry looks to profit the most. Yeah, I can see that headline being a reality. This will initiate another massive run up to each of their 8 all-time highs leading up to Christmas. Yeah, that's going to affect GameStop of all things. This is a perfect scenario for gaming developers, low competition, massive demand coming. Production can meet demand. The share price run up to all-time highs may last after Christmas, but I'm betting it comes even before the greater shortages that we talked about. Risk. No Christmas shortages happen and everything is absolutely fine, which we know is not happening. We can all feel that. But if it were the case, your downside is limited since this hasn't been priced in at all. And naturally, they will still have a run up into the holiday season. Another factor is that any potential Fed talks that shake up the entire market, and we talked about that at the beginning of the video regarding the stock market crash, a potential stock market crash, at which point any of your long positions in tech would be getting hammered anyways. So the risk or reward in the short-term market seems to be the greatest here. Positions. I'm going long in all the underlying Roblox shares. TTWO, I'm not sure what that is. EA Sports, ATVI, I think it's Activision. We will be buying call spreads around the all-time highs for each running into Christmas shopping season on the down days, with hesitation on ATVI calls due to the headwinds from internal legal factors that bring unpredictable risks. So it seems like the big concern on a lot of people's minds is how do you protect yourself and your portfolio in case of a not just a market crash, but even when we look at the shortage of when it comes to the supply chain. And this individual is looking into Roblox, TTWO, I think that's Take Two Interactive, ATVI, and EA Sports or Electronic Arts, not really EA Sports. So that's an interesting approach. That could work if that pans out. There's actually a really good idea. Q4 earnings are next year. Your timing might be off if rates keep skyrocketing. Yeah, so that's an interesting perspective and approach and strategy. I'm going to use the wait and see approach to that, but that's an interesting opinion. Never go full Wall Street bets on national TV. This was funny as a video about a guy talking about a stock. I think it's Upstart, and he's being interviewed by the anchor, and the interviewer asks him, "What do you know about the stock?" And he couldn't answer him, and yeah, he went full Wall Street bets in that case. So we'll go on to Metamaterial subreddit to close out. Okay. Metamaterials is going to be presenting October 18th. Sorry, October 18 to 20 at the Tech Connect Innovation Business Program. Don't let anyone try and convince you can't sell your shares when you want to sell them. The only time that you can't sell is if they are not held in your name, but in your broker's. The choice is yours. Okay. My prediction. Okay, well, probably going to be, I'm predicting it's going to be high. This guy keeps going on 100. All right. It also says here, I'm surprised this is not blowing up on Twitter. Today to Wednesday, they have presentations as mentioned, Tech Connect, and they also have a presentation regarding GlucoWise, their non-invasive blood sugar device. This is pretty awesome. A whole panel. It says here, glucowise, they have a whole panel. And then that's something else. I'm not sure if that's related to metamaterials, DoD military advantage. Yeah, so that is pretty big. All right, next, stop with the Maverick operating production resources. Okay, the best news, not only has George taken over, they've added 2 new wells that are not required by the terms of the lease. Very interesting. Okay, well, I'll take a look at that quick. I'm saying this is the real DD on Twitter. Take a look at that and see if there's anything to it. And we got 2 more posts that may or may not be worth your time. Okay, so that's all for today's update. It seemed like the news regarding metamaterials and their presentations with GlucoWise and the other presentation there, people are getting a little impatient, shareholders are, and that's understandable. You know, we're all waiting for a big press release from George to be unleashed on the stock market so that metamaterials will rise up. But again, I'm not sure if there's still a quiet period. It seems like it's been a significant period of time. Maybe they just don't want to release a PR that will not be that could be risky in terms of the legality of doing so. They want to make sure that when they release some big news like a deal with a Tesla or whether it's Apple or Samsung, they want to make sure that they're doing it at the right time, number one. Number two, they want to make sure the deal has been finalized. Number three, they want to make sure that there's no way that the shorts can use that news against them. So they want to make sure that there's no potential for the shorts to kind of undermine any sort of news like that. So I do believe when it comes to that kind of strategy of releasing a PR at the right time, at the right moment, you're looking at possibly into the new year, into 2022, after the dividend has been settled. So once that dividend has been issued, again, before that can happen, you have to sell off the assets. And they're doing that right now. They've started drilling. It could take 2 weeks or longer, but they're doing this. It's being done. So I don't think we have to be concerned or afraid about what's going to happen. I think we should just keep watching. We know this company has got a very competent CEO. Their technologies have so much potential in so many fields, as we keep talking about. But I think the bigger news today was not metamaterials so much. It was more GameStop. It was the potential for the video game industry to really find a golden opportunity in light of the supply chain issues and in light of a possible market crash. GameStop, Activision, Take-Two Interactive, and I think there was another company that was mentioned there. I forgot the name, but that could be a potential, really good potential buy for a lot of people to hedge their bets and kind of salvage their portfolio. Not just salvage it, but really make a killing in case there is a supply chain issue that will affect the holiday season. So that's all for this video. Thank you very much for your support, everybody. I appreciate all your feedback, all the likes, all the subscribes. Take care. We'll see you tomorrow for the next daily update. May God bless you all, and may God bless your investments.